Welcome to Get Serious. I know we have the snazzy new intro, finally trying to step up our content game and just make things look a little bit more professional as we continue to expand our content strategy here. So hopefully you'll appreciate what we're doing on our end. And today I wanted to touch base on another larger deal that we looked at in Oklahoma last week. And this was about 115 acres. And again, like all the, same rules apply with like, okay, where are you finding real sellers to work with in, markets like this? Acquisitions are tough. Dispo is arguably even tougher at the moment here. So it's a tough cycle to work in on both sides of the equation at the moment. And in this case, it's a more distressed seller. That's just what we have been finding in regard to, who are sellers that are willing to play ball at the prices that we need. Again, it's kind of the usual suspects. Is there some financial distress, family turmoil, ongoing heirship situations? These are the things that make our industry go here. So we are here to serve to find exit pathways for those type of sellers. So in this case, 115 acres, just over the the Texas border, but relatively near Dallas. And it's just outside of this, rather tertiary city in Oklahoma. And roughly half of the property is zoned for residential and about half of it is zoned for industrial, and is actually like split in a decent way. Like it is right next to, I don't know if I would call it a subdivision necessarily, but a more residential part of kind of the city outskirts where, there's a whole bunch of like, half acre size lots. So, most of the residential part of the property is like abutting right up against those areas. So, it's already in a developed area. And then, like kind of directly east of the property, there is a larger industrial plant. I want to say it's like steel manufacturing or something. From what I recall here. So, when we were looking at this property, first, it's like, okay, this is not probably the greatest location, not like the most active market here. And again, if we're going to consider a property like this, probably be thinking a minor subdivide type situation from a residential perspective. And, could we look to rezone the property from the industrial perspective, like unless we saw like a decent amount of activity with, people purchasing up industrial land, which is just not often the case here. I know, there's some data that will back up, like industrial land is, holding up values, but I'm not necessarily certain from a transactional volume perspective that that's something you really want to rely on as much. And we know like industrial starts and manufacturing have been down quite a lot this year. So, like tariff uncertainty, and it's like, okay, are companies actually going to invest further into the US? Like, it's kind of been counterproductive when you actually look at what the intent was for tariffs to bring more opportunity back to the US. Because of the kind of back and forth nature of it, it just has not really panned out that way. So you're taking a bit of a gamble that the buyers are going to be there in any case for some type of additional manufacturing. And so we were really thinking, this is probably what we would want to rezone and try to chop up into a minor subdivide possibility. Few other notes is that the seller had bought the property for like the mid 800s 3-ish years ago. It's like a more peak market. 2022 is really the true peak for most areas of the country in this latest real estate cycle before we're starting to have a lot of downward pricing pressure, and that is still ongoing. Probably not even halfway through that process yet in most areas of the country. So we're just we're baking that in. So with that in mind, like we were looking, okay, what can we really consider here? And just another key piece, and there's an extensive story to this property. I'm trying to hit all the key points here. So jumping back to the seller distress, they over levered themselves. They were trying to do some type of development and they screwed it up. It's like connected to other properties, some near or in Austin itself, maybe elsewhere too. So this was like kind of and I don't think it was just purely land in Austin either. It was some other improved real estate. And the partner who brought us this deal, I mean, very sophisticated investor, usually doesn't do land as much. They tend to do more entitlement processes or projects rather. So they brought us this Oklahoma deal. At least, hey, like take a look at it. And said, yeah, seller is like basically a passive entity, and their lender has just kind of taken over the process, and they're just trying to salvage as much as they can get within reason for their initial loan to the seller here. And so that was like indicating, some of these times like it can work pretty effectively. There's another property in Tennessee that we're working on purchasing now where the seller owns like $250,000 or something, and we're getting a partial lease on the land that's like for $70K to at least waive some of the personal lien they have that a bank is has against them. So like some of these lenders are willing to kind of work with, hey, can we at least start getting something paid back, and just being more reasonable versus just like holding out for, hey, we've got to get like top dollar back. So these are like possible situations that you can sort out. And so with that in mind, we're like, okay, there could actually be something interesting here. And what was key about this deal, and I had never seen a land appraisal report from CBRE before. I mean, it's one of the biggest real estate companies in the world, making like $40 billion a year, I think, in revenue as of last year. And they had a 90-page land appraisal report that was largely just terrible when I was reviewing it. And, there was admittedly some helpful like demographic type details, but like that's not like the most critical piece for like a land appraisal. Like you gotta show me the comps. Like, how are you judging the value of this? And comps are like the dominant piece that we have to consider for like what the true market is. And that was like, 2 pages out of, the 90-page report. And it was just terrible underwriting. Like, I can't believe how bad it was. Like, even, beginner land investors will tend to be better than this. Like, in terms of my own valuation of the property, including the opportunity to subdivide it. So, bumping the value higher than what the parent parcels could sell for. First, they only considered the parent parcels, and they didn't consider any rezoning. So it was an industrial side and a residential side. And they thought the property was appraising for like $3.5 million. But when you look at the comps, they're pulling close to like 5 years of history, which is just ridiculous. Like for properties like this, like maybe you can have that work a bit if you're doing like a much larger major subdivide and it's like really struggling to figure out, okay, what are some of these what did some of these larger developments move for? And then you can kind of like discount from there. But generally, if you're trying to like, okay, indicate comps from these parent parcels, you can't like pull something from 2022 or 2021 and tell me like that has anything to do with the current market. Plus their search radius was just outrageous. Like we were on like the border of Texas and Oklahoma. And for some of the industrial comps they were trying to pull, were like 1,000+ miles away, maybe more. Like there was a comp they were pulling from like the middle of Kansas, like from states over. Like I've never seen anything like that. Like you can't tell me that there's really any relevance to something that is just so far away. And again, the improper consideration of time. As well. And then, they arrive at $3.5 million, but you just have to like throw that out. And then like you see, okay, these like, suits at the end of the report, so-and-so, title at CBRE and stuff. Like this report probably costs thousands of dollars. And they're paying these guys like, probably, 6 figures income for sure. And for a report that's completely useless, at least from like a pricing side of things. Plus, there were a couple other things, like they were they had the seller's anticipated plan for the property, which was trying to do like this multifamily play that could have fit like 700 some odd homes on the property, like pretty dense resi. But at the same time, they show the demographics of only expecting like the population growth of like 2,200 people in that surrounding city over the next 5 years. So basically, you would need like every single person who moves to that city or the surrounding metro over the next half decade to only move onto that property from like a multifamily perspective. Like it's just completely ridiculous. I don't understand how they didn't piece these things together, especially like, higher level operators at one of the biggest real estate firms in the world. So we had to throw that out and we did our review. We thought, okay, you can rezone, maybe do 10 to 40 acre child parcels. And there's a real market for that. Like the CBRE guys, they could have figured this out. Like it's not the most difficult market I've ever looked at. Far from it. In fact, like I could pretty reasonably determine the exit price per acre and discount it in relation to some characteristics and just like, a tougher market. And we know there could be a more distressed, seller here. And, we had already heard from our partner in the deal, they might be thinking around like 300 to 400K. It could be like reasonable here. And I was thinking, if you could get these guys down to like 325, even 350, that would be so discounted from an anticipated exit to be at least a 2x on the property that it could work out. And we could have like a more creative structure where, the lender could cap us at a 2x gross on our equity into the deal. And then they would get, a percentage of the profits after like a promote structure, which is pretty interesting because then we could just drive down our, downside risk even more by like, okay, could we do like 275K, 300K? Into the deal here, which if we have like a 2x on that, there's no complaints about that at all, and it reduces our principal risk. And then if we still get a piece of any upside beyond that, we would probably list a bit higher to account for that scenario anyway. It's like, this is a really solid opportunity in a very difficult market. So like that's how we're still sorting out, okay, what is the potential here given, the circumstances that we have to work with. It's not going to just drop out of midair. You got to be creative and you got to figure out how to work through some of these like a little bit more difficult situations here. But, nevertheless, it was like, my conservative estimate or even like, baseline estimate, even optimistic for what you could get out of this deal was still like 25% of what CBRE thought this property could sell for as parent parcels. Like just ridiculous, absolutely ridiculous. These guys should really be ashamed of themselves. Like it's a complete waste. So I just wanted to share that over, those of us in the land space, like we do still have like leg up advantage on how to do this, grounds up, bottom up review. Like, we built this into Land Pricer on how to do this properly. Like, if these CBRE guys could have used that, they could have saved themselves a lot of time and been more accurate for what I'm sure they were charging their clients for. But just wanted to share another case study on how we're looking at deals nowadays, how we're looking to structure and outperforming the big guys. So hopefully this one is helpful to you all. Hopefully we're able to do that deal. We're trying to go back and forth here, figure it out. Still a lot more to do, but we'll see. So with that in mind, SeriousLand.capital, any of your funding needs, 50K plus purchase price, and daily diligence Facebook group, zero cost review of your land deals, and landpricer.ai, most reliable land pricing tool on the market. With that, take care, everybody. Subscribe and share.